And wow, there was so much volatility in the market 2 weeks ago. And what do we do next? Do we panic? And as you can see from the fear and greed index, right, as of today, last updated today, right, it is now in extreme fear, right? The numerical number is at 23. The previous close was at 20. So the market now is at extreme fear. So do we buy the dips? Let's analyze. So why does this happen? It's because of the upcoming Omicron virus, right? And Jerome Powell has been advising the market that it will be speeding up the tapering process. And as of last Friday, the job creation was short of the economical forecast. So it was 210,000 versus 573,000 forecasted. So this is quite similar to the bloodbath in February 16, earlier this year. And I have actually shared a video post that we need to panic and this is the best time to buy the dips. So before we go further, let's take a look at the indices and then we can judge ourselves. So firstly, let's look at the EXCLUSIVE, which is a US Composite Index, right? And it is actually forming a channel as I plotted here. As you can see the channel in light purple, shaded in light purple. As of today, all right, as of today is around a negative of 6.78, which is slightly better right now because the Nasdaq has increased 24 points. So basically it has now gone up to here, right? From the high, it gone down. So it's about 6%, all right? And just as a reference, right? If there's a market correction, which means that it will goes down right to 10%, right? The EXCLUSIVE will go down to around 14,385. All right, just as an example. Let me move out so they can see clearer, right? So this is what will happen. So as an investor, you will know that, well, if it goes up, it will spring back from the now the on the 100 EMA. It may spring back or it may come down if the Omicron virus gets worse, which means that a lot of people are affected and the condition might be serious, more serious than what the scientists think, right, or the doctors think. So it may go down, hit the 200 EMA, which is the next support level, or it may then goes up, go above the 50 EMA and 20 EMA, and then it will bounce back, right? So this is the Nasdaq ISIC Composite Index. Next, we'll look at the SPY, the S&P 500. Okay, let's see what we have got for the S&P 500. Okay, for the S&P 500, as you can see, again, today it's bounced up at, as of now, 3.9 points. So from the top to the bottom, as of a few hours ago, it was -4, but now it is actually better. It is only, you know, down at about near to 3%. Okay, so it's not that bad. It's not that bad, all right? And then the last one will be the Dgi Index. Okay, Dgi Index, the Dow Jones Index has again rebounded from -5% to now, it's about, now it's at here, it's only about 3%. So overall, the market has pulled back, which I view it is healthy for pullback before it's rally again. All right, whether it will rally before the year ends, no one can tell. Okay, it depends on a few factors. And I think now it depends on whether the Omicron will present a more fatal virus than everybody thinks. Right now, right now, as it is, the information from the worldwide market has seen, it seems that the Omicron is actually a less potent virus, right, that affect us. So these are the three indexes, as you can see, and it gives you an idea of how serious has the market corrected. So it has not corrected to 10% yet, right? So in summary, Dow Jones is only down 3.38%, right? And then what we have SPY, which is down 2.93%, and then we have the Nasdaq Composite. Show you the Nasdaq Composite, which is down about 6%. So Nasdaq is down more seriously than the other two indexes, which means which also symbolize that the technical declines, okay, tech stocks decline is most serious right now. Okay, so this gives you a feel of how the market is. So we do not have to panic, right, after reviewing all the three indices. And now let's look at the 6 ticker symbols that I'm going to share, and let's look at the chart to see whether it is the right time, right, for us to enter the stock. So very quickly, these are the 6 stock symbols that I'm going to share on TradingView: Microsoft, JPM, Nvidia, Facebook, Baba, and Disney. Okay, and let's go to the chart. So the first one is Microsoft Msft. Okay, let me just adjust a little bit. As you can see, Microsoft here, right, there's been declining quite a bit here, touching the 50 EMA. I would hold it for a while to see what happens, all right, probably for another candle to see what happens later today or tomorrow. But today is already quite late, it's already 1 AM. So I will still wait, all right, because the MACD is still, you know, on the red side, showing that the bears is still existing, and the stochastic, right, has not turned back into the 80% zone, right, turn inwards. Although the moving averages is still on the uptrend, right? So this is MFST. The second one will be JPM, which is JP Morgan. So JP Morgan, I think now if you want to get into stock, well, you can just go in trenches. It is coming back up, as you can see. Let me enlarge this. This is coming back up. There's this, the MACD has turned green, right? You look at this arrow here, is also going upwards. Looking at the stochastic, is also coming back in, right? So it's just above the 100 EMA, right? Just below the 100 EMA, it might go up or it might go down, and then it may go sideways for a while. So if you buy stocks, that's no problem at 161.77. If you do a buy call, only you have the budget to do it, all right? Buy a long call, right? Buy a call, again, there's more than 270 days, all right? If you really are hand itchy and you want to try a 30 days, right? Which I don't do so, although sometimes I'm very itchy-handed and right to do so, I'll do a stop loss, all right? Meaning that I'll risk 10% and then I'll reward 20%. This is when my hands are very itchy and have nothing to do on the very day. Okay, so this is for JPM. Next, we have Nvidia, NVDA, and I think Nvidia today has gone down quite a bit. Yes. So if you look at this, Nvidia has gone down $15, which is 5%. Do we go in right now? For me, in my opinion, I will not go in. All right, I'll wait again for it to turn backwards before I go in, especially for a buy call. Okay, so that is for Nvidia. The next one will be Facebook. Now, Facebook has been going down for quite a while because of all the funny news and all that. And today, as you can see, the MACD is fading out, right? And then Facebook is going. So again, if you are buying stocks, you can do so. If you have budget to buy call, you can also do so. But again, buy dips, right? Buy dips. If you are more concerned that you may lose, again, do a risk to reward ratio 1:2, 1:3, or even 1:1. Okay, that is for Facebook. Then the very interesting BABA. All right, BABA has not been favorable to most of the investors. Most of us has lost money, including myself, right? Although I have put quite a number in stock itself, but honestly, in buy call, I'm also holding out, right, on my 700 days and 400 days, and I'm still losing money, right, for BABA. So today it looks like a good green candle upwards. All right, looking good. All right, looking good, but I think I would like a further retest. Okay, a further retest for it to go above the 126 resistance line. All right, before I'll attempt more buy calls. That is for BABA. But of course, if you are doing shares, I think this is quite a good buy. $120, BABA is seriously undervalued, right? Let me see. Yep, it's seriously undervalued, right? The March 2020 crash was at 175. 2018 December pullback is at 130, right? So today it is at 120, all right? So this is BABA. Again, this is when you have budget, you don't need the money, right? If you do not have money to invest, think of other stock symbol that can actually, you know, appreciate in price faster than BABA. So BABA is something that you need to hold probably 3 months, 6 months, 9 months, or even a year, nobody knows, all right? But fundamentally, it is a very strong stock. So the last one is our dear Disney. All right, Disney looks like it's coming back up, as you can see here. Let me pull the chart a little bit. All right, after I have a buy put within and profit $240 in 1 day, right? I didn't touch Disney again. It went down all the while, and then this, right? I may look into this, right? Look at this, it is coming back upwards, right? And this may be a time that you do a buy call, again, a long dips. Okay, so this is for Disney, for the 6 stocks ticker symbol I'm sharing. But again, you know, please do your own due diligence. This is not recommendations to buy. Okay, so do your own due diligence. All right, everyone. So now you have the answer. Is this the best time to buy the dips? So I've shared with you 6 stocks. So it is do your own homework and decide whether you want to do a stock purchase or a buy call or even a buy put or even a vertical. All right, a vertical call or a vertical put, a vertical spread, whether a call or put, it's up to you to decide. All right, if you have shares, you may like to do a cover call, so on and so forth. So it is your call, right? Assuming you have learned options strategy, all right, and the fundamentals of stocks. So as usual, happy investing. This is Charlie Wong from Investing for Wealth and Happiness. And if you're ready to learn more about option strategy and fundamentals analysis, all right, join the course at only $29.99 per month, or invest in less than $200 US, which is a 45% discount for 1 year access, right, to the course. And this comes exclusively. I will be teaching you and supporting you in a support group at this IWH Mentorship and Support Group link. And hopefully I will be able to talk to you very soon, and also share this information, share this video post with your friend in Facebook and YouTube. So again, Charlie Wong signing off, and happy investing. Bye-bye.